Good morning, guys. We left question number 18 in between, guys. Question number 18, guys, had limiting factor of labor hours, but also, guys, there was specific fixed cost. Because there was specific fixed cost, I told you that we cannot directly take decision on the basis of contribution per labor hour. So what we did better is that we arrived at contribution net of specific fixed cost for every 10,000 units. We took it for every 10,000 units because fixed cost was changing after every 10,000 units. If fixed cost was not changing after every 10,000 units, we would have taken it for the respective quantity, guys. So what if fixed cost was not changing at all? Matlab there was only specific fixed cost, then there would have been multiple alternatives, guys. We will see if a question like that comes later. Just say, guys, fixed cost does not depend. Matlab if you're manufacturing S, you will have to incur that. Does not matter whether you're manufacturing 1 unit or 2 units or 3 units. In that case, better we will have to see what are the alternatives. Okay, so combinations पे आता है answer. Now, guys, here we have arrived to a conclusion. Because we computed contribution from every 10,000 units, guys, I told you if there's a part of the demand to be met. Just say, for example, guys, product our total demand is 28,000 units. I told you there, obviously, better after the 20,000 units, you're going to manufacture only additional 8,000 units. You will want to check whether manufacturing 8,000 units of R is more beneficial or manufacturing 10,000 units of product Q is more beneficial. We came to a conclusion, guys, that it is 8,000 units of R that is more beneficial, guys, than to manufacture 10,000 units of Q. And then we are not going to manufacture those additional 1,000 units of Q because that is resulting in a loss. This is the resource allocation. This is the resource order of allocation. Understood, sir? Now let us allocate labor hours. I suggest, guys, that if you in case you forgot the question as such, better in case you're doing it after a considerable gap as such, guys, do pause the video, first go through the question as such, guys, go through the solution that we did so far, and then continue. It will hardly take 5 minutes as such, guys, but then do pause so that you are understanding the remaining part as well. So next step beta here is allocation of labor hours. We will have to allocate those 1,92,000 labor hours as such, guys. Available labor hours are 1,92,000. 1,92,000. First preference is given to product R, guys, 28,000 units into 2 hours. And that is 56,000, guys. That is 56,000. So here, best part, I do not have the calculator here. 56,000 beta, you will be left with 1,36,000 labor hours. After that, beta, preference will be given to product Q, guys. Product Q, guys, it is 30,000 units multiplied by 2 hours. So that would be 60,000. And you will be left with 76,000 labor hours. Next preference as such beta was given to 18,000 units of S, 10,000 units of S, and then 8,000 units of S. 18,000 units of S beta into 3 hours. 54,000 hours. So I will be left with 22,000 hours. I will not be able to obviously cater to the entire demand of P as such, guys. So P beta 22,000 hours divided by, this is product P, guys, divided by 3 hours per unit. So this would be 7,333.33 units. But because we are not manufacturing as such, guys, you might want to check better if manufacturing, whenever we are meeting a part of the demand as such, guys, please check if it is worth meeting that demand or not. Will you be making profit or not? Because you still have to incur specific fixed cost. We still have to incur specific fixed cost, guys. Check if it is viable to manufacture. If it is viable to manufacture 7,333 units, that is, will contribution from 7,333 units recover specific fixed cost. Contribution from 7,333 units recover specific fixed cost. So there, how will you check beta? Your contribution, guys, would be, contribution without that beta would be 7,333.33 into 4 rupees, guys, into 4 rupees. Just checking beta whether it is beneficial or not. 29,333 minus specific fixed cost. The amount of specific fixed cost is 2,500. 26,833 guys is the amount. Yes, it is beneficial. Therefore, we will manufacture guys 7,333. 7,333.33 units of P. We will manufacture guys. Understood, sir. Write down, beta. This is the allocation of labor hours as such, guys. This is the allocation of labor hour, and this will become the answer to the first bit as such, guys. We're yet to compute. We are yet to compute the total contribution, beta. Pehle ye kar lo. We will do that as well, guys. He's asking us, beta, total contribution net of specific fixed cost. We will be doing that, guys. Pehle ye khatam karo sab log. Yes, guys. Please check if you're all done with this. Chalo beta, I'm assuming that you're all done with this. He's also asked us to compute profitability, guys. Can we do that? Contribution net of specific fixed cost. Contribution beta net of specific fixed cost. कर लेंगे sir. क्या तो है इसमें? There are 4 products as such, guys, that we have PQRS. The volumes that we have of these products as such, guys. The volumes that we have as such but of these products. अच्छा यहाँ पे है ना. We are manufacturing 7,333.33 units. And then beta there is this PQ. Q के 30,000 units, guys. R 28,000 units. S beta we are going to manufacture 18,000 units. The amount of contribution per unit beta that we are making here is 4 rupees. Here beta it is 10 rupees. Here it is 20 rupees. Here it is 9 rupees. 4, 10. एक बार यहाँ पे देख लेता हूँ beta. Why am I calculating again? 4, 10, 20 and 9, guys. So the amount of total contribution that we are going to make as such, guys, out of them is we just computed beta 29,333. This is 3 lakh rupees. This is 5,60,000. This is 18,000 into 9. 1,62,000. Please remember, guys, specific fixed cost should be for multiples of 10,000 units. For multiples. Here there's only the one thing beta 2,500. Yahan pe beta it should be 3 times of 12,600. Remember it is 12,600 as such, guys, for every 10,000 units. 12,600 for every 10,000 units. You are manufacturing 30,000 units, so it should be 3 times of that. 37,800. And here again, but it should be 3 times. Do not write 2.8 times. It is part thereof. Matlab, even if you manufacture 1 unit more than 20,000 units, you will still have to incur the entire amount of fixed cost. 3 into 15,000, 45,000. 2 into 18,000, 36,000. So here guys, I will write contribution net of specific fixed cost. Net of specific fixed cost, guys. So 29,333 minus 2,500. 26,833. 3 lakhs minus 37,800 is 2,62,200. 5,60,000 minus 45,000 is 5,15,000. 1,62,000 minus 36,000 is 1,26,000. 5,15,000, 262,200, 26,833. So this will be 9,30,033. This would be the answer. I'm zooming in, guys. I'm waiting for a minute. I hope you were all doing it with me. I do not have to actually wait for so much time, but still, guys, I hope you were all doing it with me, guys. The next question is very interesting. Beta, how many units should A transfer and at what price? I hope you're all done with this, beta. I hope you're all done performing the calculations. This is just computation of contribution net of specific fixed cost. We're finally done with the first bit, guys. Abhi aata hai second bit. Most important one. Division B, guys. Division B requires 20,000 units of product S. Division B requires 20,000 units of product S. For us, beta, product S is third ranked product. We have given first preference to product R. We have given next preference to product Q. Third preference has been given to product S. Last preference has been given to product P. Division B, I repeat again, needs 20,000 units of S. Division B can procure this product at a slightly cheaper price than what we will be able to sell it in the market. We can sell it in the market at 46 rupees as such, guys, but then they can procure from the market at 45 rupees. They can procure from the market at 45 rupees without any extra cost. Without any extra cost. So, sir, pay attention. If you wish to answer this as such, better do it. Pause the video now and then do it. Otherwise, better listen to the explanation carefully as such, guys. A very nice question, better interesting part here. Interesting part. First thing, guys, remember, whenever we talk about whether internal transfers are viable or not, we're talking from the viewpoint of goal congruence. We always go by minimum transfer price and maximum transfer price. Minimum transfer price as such, beta, would be your variable cost per unit plus contribution foregone, if any. Maximum transfer price as such, beta, would be the lower of net marginal revenue and the external buy-in price for the other division. External buy-in price, beta, for the other division. Understood, sir? This is what you're supposed to do. But यहाँ पे सुनो guys. What is the requirement guys? Requirement of division B beta is 20,000 units of S. 20,000 units of S. Okay. Please do not forget guys. Division A can sell product S in the market. सुन लो बेटा, product S in the market at 46 rupees. While division B beta can procure product S at 45 rupees only. At 45 rupees only. We are able to sell it in the market at 46 beta, while our own division is able to procure it from the market at 45 rupees. There can be non-qualitative characteristics, non-quantitative characteristics, beta, like the quality of the product, reliability of the vendor. All of that also would play a role as such guys here. Just like all the outsourcing decisions, make or buy decisions, what are all the factors that you're supposed to take into consideration? The same factors would apply here as well guys. But यहाँ पे बेटा when you say division S can sell, division A beta can sell at 46 rupees. We will not reduce external sales of product S. Will we guys? No sir. We will not reduce external sales of product S to transfer to division B. Why sir? Because our minimum transfer price as such beta, which is variable cost plus contribution foregone, would be 46. Whereas the maximum transfer price as such beta would only be 45. Understood sir. The maximum transfer price as such beta would be 45. So there is no way beta that we are reducing the sales of product S in the external market and transferring it to division B. This part should be crystal clear. Understood sir? Please do not worry about it. Product Q and product R. सुन लो गधो. Product Q and product R. Product Q guys and product R are higher profitable products, or they contribute more than product X. They contribute more than product S. If we are not reducing external sales of product S, there is no question beta we reduce sales of product Q and R. If we are not reducing sales of S, we will never reduce external sales of product. External sales beta of product Q and R. Please understand guys as to why am I making this statement. Q and R. Product Q and R as such beta contribute more than product S as such guys. So there is no way as such beta that we are reducing. If we are not reducing sales of product S only as such beta, product Q and R कहाँ से आ गए? If we are not reducing external sales of product Q and R only as such, product S only as such beta, obviously product Q and R beta will not come into picture anywhere. Understood sir? Yes sir. Understood sir. Absolutely fine. No doubt about it. Correct sir. Now guys, now that you have understood this, so the only possibility guys, if you reduce sales of product P as such guys, I will want to see what is the minimum transfer price, what is the maximum transfer price as such guys. We will check that as such. But do not forget as such guys, the existing resources allocated to product P guys are only 22,000 hours. The existing resources that have been allocated to product P as such beta are only 22,000 hours, nothing more than that. So we will have to check beta. We will check if it is it viable as such guys to reduce the capacity. But there also beta comes a twist. As such guys. Okay sir. We will check beta if it is viable. Resources, that is labor hours allocated at present. To product S. Are 22,000 hours. Okay. I will have to now divide this into two parts as such guys. What two parts sir? Sir, right now we are already manufacturing 18,000 units of product S to meet external demand. So till another 2,000 units there is no increase in specific fixed cost. Till another 2,000 units increase in production of product S, there is no increase in specific fixed cost. But if I go beyond 2,000 units of product S as such beta, specific fixed cost will increase. ये क्या है बेटा? Sorry, product P. Guys, right now external sales of product S, external sales of product S is 18,000 units. There will be no increase in specific fixed cost. No increase in specific fixed cost. ध्यान से सुनना बेटा. For additional 2,000 units. No increase in specific fixed cost बेटा for additional 2,000 units. मतलब see guys, up to 20,000 units. That is up to 20,000 units. Fixed cost will increase better. Specific fixed cost will increase only beyond. Specific fixed cost will increase only after that. Will increase only after additional 2,000 units. ये क्यों लिखा रहे हो सर आप? Why are you making us write all of this, sir? I'll tell you बेटा. Right now the external sales of product S beta is 18,000 units. As far as the first 2,000 units are concerned, there is going to be no impact. There is going to be no impact as such beta on the additional fixed cost of product S. But the minute you go beyond 2,000 units of product S as such beta, your specific fixed cost is going to increase. Your specific fixed cost beta is going to increase. Understood, sir? We'll keep that in mind. Excellent, sir, if you're keeping that in mind. Now guys, all right, for first 2,000 units of S, मतलब additional units of S as such guys, additional units of S, there is no change in fixed cost of P, there is no change in fixed cost of S. I will see guys, from 7,333 units I will be reducing product P's production to 5,333 units. So there is still no change between production of product P. There is still no change guys in production of product P as such guys. Yes sir, understood. तो यहाँ पे बेटा my variable my minimum transfer price as such beta would be variable cost per unit plus contribution foregone on P. Remember guys, S takes 3 hours as such guys, and for every hour as such beta P is contributing. S takes 3 hours as such guys, and for every 1 hour, अच्छा, दोनों के number of labor hours are same guys, I can directly write 4 rupees. दोनों के number of labor hours are same guys, labor hours per unit are same guys, I can directly write 4 rupees. Yes or no? So variable cost beta per unit of S plus contribution foregone on P. So this is 37 plus 441. Remember guys, labor hours per unit are same for P and S. Maximum transfer price to beta bhaiya, that fellow will say that it is 45 rupees. He will not want to pay. Division B beta will not want to pay anything more than 45 rupees. Please understand guys, for the first 2,000 units of S, there is no change in fixed cost of P. There is no change in fixed cost of S. So I'm directly comparing variable cost plus contribution foregone guys. Variable cost to manufacture S is 37 rupees. And for every unit that I manufacture of S beta, I'm also foregoing a contribution of 4 rupees on product P. 4 rupees on product P that I have factored in as such guys. That I have factored in. For additional 5,333.33 units of S. For additional 5,333 units of S beta. There are totally 22,000 hours beta. 7,333 units of P to be replaced by 7,333 units of S. That is what we are doing guys. That also we are dividing into two parts beta to check if it is viable or not. Here beta, first I will talk about net additional fixed cost. Net fixed cost beta, additional fixed cost. So guys, in case of S beta, my fixed cost is going to increase by additional fixed cost beta of S. Additional fixed cost of S beta. My fixed cost of S beta is going to increase by 18,000, but wait sir, there's a twist. There is savings in fixed cost of P. I will not have to incur that 2,500 now. I will not have to incur that 2,000. Guys, if I'm incurring 18,000 more on S, but I'm also saving 2,500 on P, guys. I'm also saving 2,500. So it is only 15,500. Net additional fixed cost per unit would be 15,500 divided by 5,333.33. 15,500 divided by 5,333.33. 2.90625. This is your net additional fixed cost per unit. Please understand guys, this question is very interesting. 2.90625. Sir, interesting आपके लिए होगा sir, हमारे लिए नहीं. Minimum transfer price beta will now be variable cost per unit plus this additional fixed cost plus contribution foregone. 37, 2.90625 plus 4. 37 plus 4. 43.90625. Maximum transfer price to beta it is 45 rupees only. So yes beta, you will still transfer. You will still transfer. If you want beta, overall average transfer price would be 2000 units beta, we came to a conclusion should be at 41 rupees. 5333.33 units beta, we said it is at 43.90625 divided by 7333.33 units. 43.1136. 114. This is my average transfer price beta per unit. This is the answer to the second bit, guys. Is it in the company's interest? Third bit beta, is it in the company's interest? No. No. Full stop. It is not in company's interest to transfer entire to 20,000 units. It is not. वो अपन conclusion already लिख चुके बेटा. I do not know why are they asking this again. It is not in company's interest. If it was in company's interest, but I would have written no to transfer entire 20,000 units to S. 20,000 units to S beta. Only 7,333.33 units should be transferred at a minimum transfer price of should be transferred at a minimum transfer price of 43.114. Do not forget beta, maximum transfer price would be 45. Let them fight, let them negotiate between these two ranges. But for the purpose of decision making, guys, this is what you'll have to write. I hope everyone has understood this, guys. First, we are ruling out beta as to what are all the opportunity costs. We are ruling out the possibility so that we know that we are supposed to operate in a very limited zone, very limited area. Question बहुत बड़ा था, guys. Chances of this coming in the examination is less, but do not forget it has come in the examination once before. So yes, do it, guys. All of you do it, guys. You're done with this question. I hope you've understood this. In case you have any doubts, you can always reach out to me. You can always reach out to me, guys, on Telegram. कॉपी करो बेटा ये. Hope you're all doing it बेटा. कॉपी करो फटाफट. Yes, guys, I hope you're all done with this. Yes guys, I hope you're all done with this. बहुत ज़्यादा टाइम दे दिया तुम लोग को कॉपी करने के लिए, ठीक है? That was just to ensure बेटा that you guys understand it, just in case you missed out any part. Understood sir? Now guys let me just quickly 18th वाला हो चुका है, 17th वाला हो चुका है, 16 done, 15 done, 14, 13, 12, 11 done, 10 done. We are not done with 9th and 8th question. उसके पहले के 7, 6, 5, 4, 3, 2, 1 all done. Okay guys, so in between beta we left two questions guys, question number 8 and question number 9. Let us finish them now guys, so that in the order beta we are done till all the we are done with all the questions till question number जो भी था beta ये 17, 18, 18th one तक, ठीक है? चलो guys, question number 8 guys, question number 8 beta now. A company is organized on decentralized lines with each manufacturing division operating as a separate profit center. Each division manager has full authority to decide on on the sale of division's output to outsiders or to other divisions. Division AB manufactures a single standardized product. Some output is sold externally and the remaining is transferred to division XY, where it is a sub-assembly in the manufacture of the division product. So guys, if I go by this statement guys, if I go by this statement which says some output is sold externally and the remaining is transferred, I might come to a conclusion better that this division is operating at full capacity. I might come to a conclusion better that this division is operating at full capacity. Yes or no? When they say some is sold externally and the remaining is transferred internally, zaruri nahi hai beta. It is the output beta that is being sold externally and transferred internally. So here guys, the unit cost of division A and B are given by the direct material, direct labor, direct expenses, variable manufacturing overheads, variable selling and packing expenses. And then beta transfer price is 42 rupees, 35, 4.5, 18 rupees are variable manufacturing overheads, variable selling expenses. Fixed manufacturing overheads are given guys. Division AB sold 40,000 units annually at a standard price of 45 in the external price. In addition to the external sales, 10,000 units are transferred annually beta to division XY at a price of 42 rupees per unit. Variable selling and packing expenses are not incurred by supplying division for the internal transfer of the product. Because you are not incurring as such guys variable cost per unit or internal transfers as such guys, variable selling expenses. That is why beta, though we are selling in the external market at 45 rupees as such guys, for the purpose of internal transfers, as such guys, for the purpose of internal transfers, you have reduced it by 3 rupees. 45 go beta, that is a saving. Remember guys, market based transfer pricing method. Mein your transfer price beta should be equal to market price plus or minus beta savings, adjusted for savings guys. Division XY incorporates the transferred goods into a more advanced product. The manager of Division XY disagrees with the basis used to set the transfer price. He argues that transfer price should be made at variable cost, since he claims that his division is taking output that Division AB beta should be unable to sell at a price of 45. So guys, the recipient division guys, the purchasing division argues that he is acquiring that output which division AB cannot sell in the external market at the price of 45. So if he is being sold goods at 45 rupees, that is unfair. He also submitted a report of the relationship between selling price and demand to support of his disagreement. The report of customer demand at various selling prices for division AB and for division XY are as follows. ठीक है सर, वो समझ लेते हैं. As of now guys, so far what is that we have understood guys? As of now so far beta, so that we do not forget the question number 8 guys. So far beta, what did we understand? Total existing details लिख रहा हूँ बेटा मैं, only existing details. Existing details as such guys. Total output of division AB is how much? Total output sir of division AB sir is 50,000 units. 50,000 units. Out of this sir, 40,000 units are transferred to 40,000 units are transferred to are sold externally. 40,000 beta are external sales at 45 rupees. External sales at 45 rupees, and then beta there are 10,000 units internal transfers at 42. Internal transfers at 42. If you look at the variable cost per unit as such guys for division AB, for external sales it is different guys, for internal transfers it is different. You can add guys variable cost per unit 6 plus 3 plus 3 plus 3. Sorry, 4 threes. 6, 3, 3, 3 and 3. All of this beta put together guys would be 9 rupees plus 18 rupees. As far as internal transfers are concerned, guys, you will not incur 3 rupees as such, guys. There is a saving as such beta in variable selling and packing expenditure, so it is only 15 rupees. एक बार देख लेता हूँ बेटा 3 हाँ. Total fixed cost as such beta would be, you can multiply total fixed cost would be 6 rupees per unit into 50,000 units. Why 50,000 units? Because right now beta the output is 50,000 units. It makes sense to multiply by 50,000 units. Okay, sir. Likewise, beta, as far as total output of division XY is concerned, total output of division XY, I'm just writing the given details, guys. It is 10,000 units, but at present, 10,000 units. You talk about their variable cost per unit as such, but it would be transfer price plus other variable cost. I will write transfer price as 42 rupees and other variable cost, but let us add all of them. It is 4.5 and 18 rupees and 2.5. Sorry, 35 rupees. 4.5, 18 rupees and 2.5. 35, 4.5, 18, 2.5, 60 rupees. So this is 42 rupees is your transfer price. Other variable cost is 62. Total beta is 102. And that total fixed cost as such beta would be, 10,000 units multiplied by 18 rupees. सुन लो बेटा, सिर्फ गिवन इंफॉर्मेशन लिख रहा हूँ. So this is your given information, guys. What is to be done with this information, I will tell you. But this is your information, guys. We got total fixed cost, we got existing internal transfers, variable cost. What is the variable cost per unit for external sales and everything. ठीक है? हाँ sir, understood. Copy this beta first. All of you copy this beta, then we will proceed to the next part. Just writing the given details so that we do not lose the overall picture. Guys, I hope you're all done with this. I hope you're all done with this, beta. हो गया सबका? He also submitted a report of the relationship between selling price and demand to support his disagreement. The report of customer demand at various selling prices for division AB and for division XY are as follows. Division AB, guys. He can sell 60,000 units in the market provided the selling price is 30 rupees, 40,000 at 45 rupees, 20,000 at 60 rupees. Division XY beta can sell 15,000 units at 120, 135, 150. The company has sufficient capacity to meet demand at various selling prices. Internal transfers demanded units beta will be decided by XY division. ये देखो बेटा, it says you have sufficient capacity to meet demand at various selling prices. That means division AB beta can operate at a demand level of 60,000 units as well. Division AB beta can operate at a demand level of 60,000 units as well. Yes or no? Yes, sir. So you'll have to calculate divisional profitability and overall profitability of the company, guys, if division AB transfers demanded units to XY at a price of 42 rupees. To calculate divisional profitability and overall profitability if they transfer demanded units to XY beta at variable cost. Forget the third bit, let us concentrate on the first two bits. Forget the third bit beta, let us concentrate on the first two bits only. Understood, sir? First two bits क्या बोलता है बेटा is that what would be the divisional profitability and the overall profitability if the transfer price is 42 and if the transfer price beta is equal to variable cost, and we know variable cost is 15 rupees. Before we attempt directly the profitability statement as such, guys, we will have to compute something called as profit maximizing selling price for both division AB and division XY. मतलब गाइस डिवीजन ए बी कितना रेडी है मार्केट में बेचने के लिए. इट इज वेरी मच रिक्वायर्ड सच गाइस टू नो व्हाट इज द प्रॉफिट मैक्सिमाइजिंग सेलिंग प्राइस बेटा फॉर डिवीजन ए बी, and also to know what is the profit maximizing selling price for division XY. In case you reduce the transfer price to division XY beta, will he be selling more units in the market? And we will have enough capacity, guys. Do not worry about it. Do not worry about it. So before we attempt the question, guys, questions like this you will have to first arrive at profit maximizing selling price. Questions like this beta you will have to first arrive at profit maximizing selling price. समझ में आ रहा है सर? यहाँ देख के बेटा लेफ्ट साइड पे गर्दन खराब हो जा रही है. So you'll have to arrive at profit maximizing selling price beta based on all of this. So let us first arrive. You can all do it with me beta. This is simple. We have done a lot of questions and pricing decisions based on profit maximizing selling price. So here, guys, I'll say profit maximizing selling price for division AB. We've already written what is the variable cost per unit as such, guys. We will now write the demand levels as such, guys, can be 60,000 units, can be 40,000 units, and can be 20,000 units. The selling price per unit beta is 30, 45 and 60. The variable cost per unit for external sales, guys, is 18 rupees. So your contribution per unit is 12, 27 and 42. Total contribution, guys, would be 7,20,000. 40,000 into 27 is 10,80,000. 8,40,000. Undoubtedly, guys, the profit maximizing selling price. Therefore, guys, profit maximizing selling price. Profit maximizing selling price beta for division AB, guys, is 45 rupees only. Is 45 rupees. Division AB has a capacity. Division AB beta can manufacture 60,000 units as well. Yes or no? Can manufacture 60,000 units also. Here beta demand is only 40,000 units. Demand is 40,000 units. So guys, do not forget beta internal transfers beta are out of spare capacity only. Internal transfers are out of spare capacity. It is not that we are actually reducing external sales. Internal transfers beta are out of spare capacity. We are not reducing any external sales beta. समझ में आ रहा है? Yes sir. Write this beta, then we will compute profit maximizing selling price for division X5 beta, but in two cases. What if the transfer price as such beta is 42 rupees, and what if the transfer price beta is 15 rupees? That is variable cost. How many units will they be willing to sell? लिखो गए सब लोग ये. Just going to wait for a minute, guys. Quickly finish this. We're all done with this, guys. This was a simple part. Now, guys, we will decide what will be the profit maximizing selling price. We do not know beta what is the output beta that they're going to sell. Profit maximizing selling price beta for division XY. For division XY. Now, guys, here if transfer price beta is 42 rupees, do not forget their variable cost per unit will be 42 plus 60, 102 rupees. Their other variable cost is 60 beta as I've written here. Their other variable cost is 60, guys, as I have written here. Yes, sir. So now beta, the demand levels as such, guys. The demand levels can be 15,000, 10,000, and 5,000 units. 5,000 units, 15,000, 10,000, and 5,000 units. Your selling price per unit beta is selling price per unit कहाँ गया बे यहाँ पे 120, 135 and 150. Your variable cost per unit, guys, is 102 rupees only. That is not going to change. So your contribution per unit, guys, is going to be 18 rupees, 27, no, 33 rupees. And then beta 48 rupees. Your total contribution as such, guys, total contribution would be 2,70,000, 3,30,000, 2,40,000. So yes, beta, in case beta the transfer price is 42 rupees, they will not want to sell anything more than 10,000 units. They will restrict the output to 10,000 units, resulting in a profit of 3,30,000 rupees to the other division. If transfer price beta is equal to 15 rupees, that is variable cost of AB, then beta your total variable cost per unit, guys, here would be 15 plus 60, 75 rupees. Here we might want to know what is the profit maximizing selling price. Demand is 15,000, 10,000, and 5,000. You guys can do this beta. I hope you've now understood what I'm trying to prove here. 120, 135, and 150. Our variable cost per unit beta is 75 rupees all the way. The amount of contribution per unit that we're making is 45. This is 60 and this is 75. Total contribution that we are going to make out of this beta is 15,000 units beta into 45, 6,75,000. 6 lakhs. 5,000 into 75 is 3,75,000. It is very clear beta that if you reduce the transfer price to 15 rupees, division AB beta would want to sell 15,000 units. Division AB beta would want to sell 15,000 units and not 10,000 units. So if transfer price beta is reduced, it does not mean we're going to reduce external sales, guys. So you are still going to sell 40,000 units in the external market. Is reduced to 15 rupees. Division AB beta will sell 15,000 units in place of 10,000 units. So you see, guys, right now they are selling 40,000 units and 10,000 units beta, and that is because of their respective maximum profitability occurring at those prices. But then if you alter the transfer price a little bit, the output of the entire company is changing. I told you in the very beginning, but a transfer price has no impact on the overall profits. Divisional profits, yes. Divisional profits, yes, as long as the output of the company is not changing. But here the output of the company is changing because of transfer price. So I will want to know better what is the total profits that we are making at 40 plus 10, 40 plus 15,000 units. We are not concerned with divisional profitability as such, guys, but then we will know better at least whether the decision is from the viewpoint of the company or not. Understood, sir? Please copy this, guys. Copy this, but a profit maximizing selling price, and then we'll start presenting those profitability statements for both the divisions. अब you're done with the first part guys, नहीं हुआ तो pause कर लेना, ठीक है? The second part guys, now quick. I hope you're all clear about this. Yes beta. First bit guys, profitability. So here beta divisional profitability. First bit में guys, याद रखना बेटा, there are 40,000 units being sold externally as such guys, 40,000 units being sold externally and 10,000 units internal transfers. Division AB guys, करेक्ट ही तो कराना यार. हाँ. Division AB बेटा, there are external sales and then beta there are internal transfers. Then division XY guys, there are just external sales. The variable, अरे यार सब लोग कर सकते हो बेटा. The selling price per unit guys of division AB in external sales is 45, internal transfers 42, and we are selling 10,000 units at 135. The variable cost per unit guys is 18 rupees. Here it is 15 rupees. Here we got it as 102 better. The amount of contribution per unit that we are making guys, here it is 27. Here also guys it is 27. Here guys it is 33. The amount of output तो लिखा ही नहीं बेटा मैं. Our output as such guys is 40,000 units in the external market, 10,000 internal transfers, and here 10,000 external sales. Our total contribution guys, total contribution is 40,000 into 27 guys, 10 lakh 80,000. 10,000 into 27 guys is 2 lakh 70,000. 3 lakh 30,000. Put together beta this is 13 lakhs 50,000. लेस we've already determined fixed cost बेटा, स्टार्टिंग में ही लिखा था मैं fixed cost कितना है, 1 lakh 80 and 3 lakhs guys. 3 lakhs and 1 lakh 80. You will now get profits as such guys of these divisions. Profit beta here would be 10.5 lakhs. And here beta it is 3.3 minus 1.8 beta 1.5 lakhs. Total profit of the company guys is Total profit of the company, guys, is 12 lakh rupees under the first case. Okay, sir. This is the total profit of the company. Understood, sir. Please write this, guys. All of you better write this. This is the first bit, better profitability statement. Profitability statement, guys. I hope you're all done with this, beta. Let us proceed to the second bit. I had to pause the video for a considerable time, beta. Now my son woke up, he came to me and is like, no, you're not recording again. So guys, profitability statement if internal transfers are at variable cost. Profitability statement if internal transfers are at variable cost, guys, and we know better if you transfer at variable cost, the other division better would sell 15,000 units and not just 10,000 units. The output better here is 40,000 units. Internal transfers, you can do it with me better, 15,000. External sales 15,000 units. The selling price per unit, guys, here it is 45 rupees. 45, right? Yes, better. Here better internal transfers are 15 rupees. External sales better here will be 135, no, 120 rupees. Your variable cost per unit, guys, of internal transfers, it is external sales is 18, internal transfers 15, and this would be 15 plus 60 beta 75 rupees. Your contribution per unit, guys, is 27 0 and 45 rupees. 45 rupees. The total contribution that you're going to make beta is 27 into that 10 lakh 80,000 0, guys, and here beta it would be 15,000 into 45 6 lakh 75,000. You talk about the fixed cost that they're incurring, guys. First division is incurring 3 lakh, second division is incurring kitna beta hai? The second division beta is incurring 1 lakh 80,000 rupees, correct? Yes, sir. So what will be the amount of profit that they're making? 7.8 lakhs. 6.75 minus 1.8 beta 4.95 lakhs. The total profit of the company, guys. Total profit of the company would be 7.8 lakhs plus 4.95 lakhs. 12.75 lakhs. Earlier, the company as a whole beta was making 12 lakh rupees. Now, the company as a whole beta is making 12.7 lakhs. 12.75 lakhs. Please do not forget, beta, the overall profitability of the company is increasing by 75,000. Overall profitability of the company is increasing by 75,000. So if you talk from the company's viewpoint as such, beta, it is viable to transfer 15,000 units. Is increasing by 75,000. Transfer price had an impact on transfer price, beta, had an impact on total output. Had an impact on total output. Hence, there was an impact on profit too. Hence, there is an impact on profit too. There is an impact on profit too. Remember, transfer price is not supposed to have an impact, but this is suboptimal decision making. This is suboptimal decision making, guys. I hope you all understood this, but please copy the second bit. Copy the second bit, guys. Yes, guys. I hope you're all doing it. Yes, guys. I hope we're all clear about this. Let us move to the third bit, guys. In place of internal transfers, AB division can now sell 10,000 units beta of their product in a new external market without affecting existing market at a price of 32 per unit. And X5 division can purchase these units at a rate of 31 in the open market. Calculate company's profit by the following strategies. Guys, requirement 3 beta is assumed to be independent. Please assume beta requirement 3 is independent of the earlier requirements. Is an independent situation. मतलब पिछले bits को related नहीं है guys. पिछले bits को related नहीं है, ठीक है. Now what is happening beta is here we will compare profits with part 1 guys. We will be comparing profits with part 1 guys. तो यहाँ पे बेटा as far as division AB is concerned, as far as division X5 is concerned, here beta we have external sales at 45 rupees. We also have external sales of 10,000 units at 31 rupees. Here beta we have external sales as such guys. We have external sales. Please understand beta, division AB guys is able to sell at 31 rupees as such guys. Can sell 10,000 units in the open market at 32. I'm so sorry guys. At 32 rupees as such guys. And the other division beta is procuring it at 31 rupees in the open market. External sales as such beta. तो यहाँ पे बेटा output कितना है first? This is their outputs as such guys. Your selling price per unit I've already written 45, 32 and this is 135. Variable cost per unit as such guys. Variable cost per unit is the amount of variable cost कितना कह रही है? 18 rupees. This is also 18 beta because these are external transfers. And this beta would be he's procuring it at 31. Apart from that, he will incur 60 beta. So that is 91. So the amount of contribution per unit, guys, would be 27. Here it is 14. Here beta it is 131 minus 91 is 34. 44. So your total contribution as such, guys, would be 27 into 40,000 units as such beta would be 8 lakh, 10 lakh 80,000. And this beta would be 1,40,000 and this beta would be 4,40,000. Put together beta this is 12,20,000. Deduct whatever fixed cost that we have computed beta 3 lakhs and 1,80,000. 9.2 lakhs. 4.4 minus 1.8. 2.6 lakhs. The total profitability of the company as such guys. Total profits 9.2 lakhs plus 2.6 lakhs is 11.8 lakhs. 11.8 lakhs. If I compare guys, please pay attention guys. Please pay attention. In comparison to requirement 1. In comparison. This is not required beta because he only asks us to compute profits guys. But in comparison to requirement 1 beta, the total profit of the company is 12 lakhs. This is actually not required guys. This is actually not required guys. I repeat again. Why is it not required sir? Because sir in requirement the requirement here is to only compute profits guys and not give your judgments and not give your decisions. Anyways, but in comparison to requirement 1 guys, the total profit of the company is 12 lakh rupees guys. So यहाँ पे beta if I see variable cost of internal transfers is 15 rupees. Contribution per unit guys on external sales. Opportunity cost is only 14 rupees beta now. 14 rupees. So my minimum transfer price as such beta should be 29. Maximum transfer price beta is 31. Company as a whole beta will lose 2 rupees. Company as a whole beta will lose. Matlab our effective realization, though we are able to sell in the market at 32 beta, do not forget we are also incurring variable S&D. That means we are losing out that 3 rupees guys. So the minimum transfer price is only 29 while the other division is procuring at 31. Company as a whole beta will lose 2 rupees per unit. 2 into 10,000, 20,000 rupees. 2 into 10,000 units beta 20,000 rupees. That is what is the difference beta between the profit under the third alternative and profit under the first alternative. Profit under the third alternative and profit under the first alternative. Are we clear? Yes sir. Please make a note of it guys. All of you better copy this. Yes, better here. I hope you've copied the above part. Copy this part now. I hope you're all done with this, beta. Chalo guys, I hope you're all done with this. The next question is similar. I hope you've understood the reason for that difference of 20,000 rupees in requirement 1 and requirement 2. Why am I comparing requirement 1 and 2 better? The total output of requirement 1 and the total output of requirement 2 guys, both of them are same. I just realized that the table is way too close to the camera. Yeah, the total requirement of this thing guys, the total profit, total output of requirement 1 is the same as the total output of requirement 3 guys. That is why we compared profits as such guys. That is why we compared profits. And for this bit guys, third bit, because the wording used is like instead of internal transfers you can sell it in the external market, that means there's an opportunity cost for those 10,000 units. Understood sir. Question number 9. Someone might argue but in the third bit that sir, what if we can also additionally sell 10,000 units in the external market? इसलिए बेटा उसको independent लो. मतलब see guys, this answer holds good. The above not required in exam guys. The above conclusion holds good only if capacity is restricted to, not required in exam. The conclusion, the above conclusion beta holds good only if capacity is restricted to 50,000 units. Conclusion holds if I have a capacity of 60,000 units as such guys, then do not forget even this is not required beta in exam. All of this is only for our understanding because they asked us to compute only profits and nothing else beta here. But anyways beta, this above conclusion holds good guys only if capacity of division AB is restricted to 50,000 units. Capacity of division AB is restricted to 50,000 units. If capacity of AB beta is 60,000 units, if capacity of AB beta is 60,000 units as such guys, matlab capacity of AB beta is 60,000 units, then to beta minimum transfer price for internal transfers will only be 15 rupees. I can sell those 10,000 units additionally in the market beta at 31 rupees, apart from 32 rupees, and apart from that beta also transfer internally beta at a minimum transfer price of 15 rupees. In that way beta company as a whole will lose 1,60,000. 1,60,000. Understood sir? ये भी लिख लो बेटा. All of you just write this guys. We'll now proceed to the next question beta. Question number 9. Question number 9. Yes guys. Question number 9 beta. PX is a manufacturing company of which division PQR manufactures a single standardized product. Some of the output is sold externally, whilst the remainder is transferred to division RPQ, where it is sub-assembly in the manufacture of that division's product. PQR has an annual capacity to produce 30,000 units. Problem solved. It is made it very, very clear beta. This was not specified in the previous question. Here it is clearly specified guys that the capacity is restricted to 30,000 units. The capacity of division PQR as well beta is restricted to 30,000 units. The unit cost of PQR's product areas are as under. Direct material, direct labor, direct expenses, variable manufacturing overheads, fixed manufacturing overheads, selling and packaging expenses variable. Annually, 20,000 units of the products are sold externally at a price of 300 rupees per unit. In addition to external sales, 10,000 units are transferred annually better to division RPQ at a price of 290 rupees per unit. This transfer price is obtained by deducting variable selling and packing expenses from the external price, as those expenses better are not incurred for internal transfers. Just like the previous bit better, but here capacity is restricted to 30,000 units. We have external sales of 20,000 units, and then there are internal transfers of 10,000 units. Division RPQ beta incorporates a transferred and goods into a more advanced product. One second, guys. Yes, guys. My son came running as such better. Yes, guys. So your division RPQ incorporates the transferred and goods into a more advanced product. Unit cost of this product are as follows. We have the transferred and price as such, guys, 290 rupees. Direct materials and components, direct labor, variable overheads, fixed overheads, selling and packing expenditure. ठीक है. Do you want to write information so far? Nice, sir. Similar to the previous question. लिख लेते ना बेटा. Most important point is capacity constraint. Let us just write information, guys, whatever is given so far in the question. ठीक है. So first one beta is division PQR. Division PQR. Please do not forget beta that their capacity is 30,000 units. 30,000 units. Out of that beta external sales are 20,000 units at 300 rupees. At 300 rupees per unit. The variable cost per unit beta for external transfers is 40, 20, 20, 100 and 110 rupees. You can add them, guys. And internal transfers better. 10,000 units at 290 rupees per unit. 40, 20, 20, 20, 20. Variable cost per unit is 100 rupees. Fixed cost as such beta is 40 rupees per unit multiplied by 30,000 units. 12 lakhs. 40 rupees per unit, guys, multiplied by 30,000 units, 12 lakhs. And then beta there is division RPQ. Division RPQ, guys. And this division RPQ beta has a capacity of 10,000 units. Sorry, their sales are such, but we do not know their capacity. Sales are 10,000 units. Variable cost as such beta per unit is whatever is the internal transfer. They are incurring a transfer price of 290, guys. And apart from that beta, they are incurring 230, 30, 120 and 10, 390. The other variable cost beta is 390. Put together, guys, it is 290, 390, 680. Their selling price per unit as such, guys, दिया हुआ है क्या? Next page में दिया हुआ है. Selling price per unit beta 10,000 units is 900 rupees. 900 rupees. And their fixed cost beta is 10,000 units multiplied by 120 rupees. 12 lakhs. 12 lakhs, guys. This is the amount of their fixed cost. Yes, guys. All of you copy this better. Just write these details, guys, and then we'll continue solving the question. Copy, guys. Yes, beta. Do not forget, beta, the different part of this question is that the capacity is restricted to 30,000 units. The total capacity, beta, is restricted to 30,000 units. Let us not forget that fact. Let us not forget that fact, beta. Now, guys, I hope you're all done with this. I hope you've all written this basic information, guys. You are supposed to calculate variable cost per unit on your own, guys, and not directly copy from the screen. Do not forget that. इसके आगे बेटा अभी Division RPQ's manager disagrees with the basis used to set the transfer price. He argues that the transfers should be made at variable cost plus an agreed minimal markup. Because his division is taking output, that division PQR would be unable to sell at a price of 300 rupees. Just like the previous question, guys, even here is arguing better that division PQR will not be able to sell the entire output at 300 rupees. The output of division PQR is being restricted to 20,000 units because that is the profit maximizing selling price for them. Partly because of this disagreement, but a study of the relationship between selling price and demand has been carried out for each division by the company's sales director. The study has brought out the following demand schedule. We have these beta for division PQR, ये highlighted नहीं है. And then this we have for division RPQ, guys. The manager of the division RPQ claims that this study supports his case. He suggests that a transfer price of 120 rupees would give division PQR a reasonable contribution to its fixed overheads. While allowing division RPQ to earn a reasonable profit, he also believes that it would lead to an increase in output and an improvement in the overall level of company's profits. Lead to increase in output, बेटा ये अपने खुद की बात कर रहा है. वो अपने खुद की बात कर रहा है बेटा. He says that he will उसका output increase होगा. कैसे होगा? I'll tell you बेटा. Improvement in the overall level of company's profits. Calculate the effect of the transfer price of 290 rupees per unit on the company's operating profit. Calculate the optimal product mix. To know what is the effect of transfer price of 290 rupees as such, guys, on the company's operating profit, I will have to obviously, guys, prepare something called as profitability statements, guys. So forget the question for a minute, guys. Forget the question for a minute. We will first arrive at, forget the question, matlab requirements, beta, sorry, for a minute. We will first arrive at the profit maximizing selling price. We would first arrive at profit maximizing selling price. Profit maximizing selling price as such, guys. ये तो हो गया ना सबका? हाँ सर. Now we will arrive at first profit maximizing selling price for all of these divisions, guys, and see what are the impact. Profit maximizing selling price. हाँ सर, कर लेते हैं. Do not forget, beta, the capacity is restricted. That is the most important point. First beta is for division PQR. For division PQR as such, guys, the output beta of division PQR can be 30,000 units, 20,000 and 10,000 units. Add a selling price per unit of 200, 300 and 400. 200, 300 and 400. Our variable cost per unit is such, guys. Variable cost per unit is 110 beta. External sales है guys ये. Contribution per unit, guys, is 90 rupees, 190 rupees and 290 rupees. Our total contribution as such, guys, is 30,000 into 90 beta is 27 lakhs. 20,000 into 190 as such beta is 38 lakhs. And this is 29 lakhs. So yes, beta, the profit maximizing selling price beta for division PQR is occurring at a volume of 20,000 units when the price is 300 rupees. When the price is 300 rupees. For division RPQ, guys. For division RPQ. If transfer price is 290. If transfer price is 290 and your variable cost per unit beta for them is 290 plus 390, 680. Karte jao beta, we've just done all of this, guys, so there should not be any problem, guys, for you guys. Output beta can be 14,400, 10,000, 5,600 units. Price beta, selling price is 800, 900 and 1000. Contribution per unit beta will be 120. Variable cost per unit 680 है ना बेटा, वहाँ पे लिखा मैं भी 220 and 320. Total contribution as such, guys, 14,400 into 120 guys is 17 lakhs 28,000. 10,000 into 220, 22 lakhs. Maybe क्या multiply कर रहा होगे into 320 बेटा 17 lakhs 92,000. So undoubtedly बेटा they will sell only 10,000 units बेटा if the transfer price is 290. Now again बेटा for division RPQ only, if transfer price beta is 120 rupees, the variable cost per unit beta would become 120 beta plus 390, 510. Output is 14,400, 10,000 units and 5,600. Price is 800, 900 and 1,000. Contribution per unit beta would be 800 minus 510, 290, 390, 490. Total contribution 290 guys. 41 lakh 76,000. 10,000 into 390, 39 lakhs. 5,600 into 490, 27 lakhs 44,000. The first division beta would want to sell 14,400 units. The first division beta. Second division would want to sell 14,400. But guys, the problem here beta is most important point now. Most important point guys. इसके बाद में profitability statement बनाएंगे. सब लोग सुन लो बेटा. Even if you are not done with the above part, please listen guys. Please listen guys. यहाँ पे I disagree with ICI beta as to what ICI did and what I'm doing beta. Two different scenarios. हाँ. If we transfer कितना है बेटा वो 14,000 if we मतलब बेटा division PQR. एक सेकेंड बेटा. Yes guys, if division PQR transfers, सुन लो बेटा, PQR transfers 14,400 units to division RPQ, it can either sell 10,000 units in market at 400 rupees or sell 15,600 units in market at 300 rupees. Total capacity beta is restricted to. Total capacity beta is limited to 30,000 units. Is limited to 30,000 units. Yes or no? You do not have. ICI क्या करा बेटा? They directly took 10,000 units at 400 rupees. While a better alternative was to sell 15,600 units at 300 rupees as such guys. At 300 rupees. They said if you are transferring 14,400, you do not have an option. You can only manufacture and sell 10,000 units. We will sell and manufacture 15,000 units, no beta. Total capacity is 30,000 units. Even if I transfer 14,400 to the other division, I still have a capacity of 15,600. Also guys, anything more than external sales, you cannot sell guys. You look at the details of division PQR as such बेटा. यहाँ पे देखो बेटा, मैं बुक देख रहा हूँ. ये जो division PQR के details as such guys, if you want to sell anything more than 10,000 units as such guys, you will have to go at a price of 300. Please do not think better that up to 19,999 units you will be able to sell at 400 rupees. That is not possible. Anything more than 10,000 units, if you want to sell, you'll have to bring down the selling price to 300 rupees. You'll have to bring down the selling price to 300 rupees guys. External sales beta beyond 10,000 units. External sales beyond 10,000 units will be at a price of 300 only. Will be at 300 rupees only. So we will have to decide what is better as such beta. What is better? See guys, 10,000 units. Selling price per unit would be 400. Our variable cost per unit is 110. Contribution per unit is 290. Total contribution guys is 2,90,000. Or another option guys is to sell 15,600 units at a price of 300. Contribution per unit will be 190. 15,600 into 190. You see, beta, this is 29 lakhs. I'm so sorry. And this is 29 lakh 64,000. This is better, guys. So if in case you're transferring 14,400 units to the other division as such, but the first division, instead of selling 10,000 units in the external market at a price of 400 rupees, we should be selling 15,600 units in the market, guys, at 300 rupees. At 300 rupees. Are we clear about this? Yes, sir. Please copy this, guys, just in case you're not done with it. ये तो हो ही गया होगा बेटा. In case you're not done with the first part, guys, you can pause and copy. You can pause and copy, guys. In case you're not done with the first part, you can pause and copy this. This part, guys, now division RPQ. Here, beta. Hope you're all done with this, beta. That was a lot of time given to you. Now guys, we will compute profitability statements at all the alternatives as such guys and then decide. दोनों के आंसर सेम ही रहेंगे बेटा. Calculate the effect of the transfer price if you want to know. I would see better whether transferring at 120 rupees is viable or not. So both the answers better that they've given as such guys are all this only. So guys, first alternative better, alternative one guys. Uh, Division PQR beta will have external sales at 20,000 units. Or I'll write beta first. What are all the alternatives that we are looking at as such guys? Only two alternatives I believe guys. 20,000 units, 10,000 units, 20,000, 10,000. जाने दो. लिखता बटा directly. External sales as such guys of division PQR. External sales of division PQR is 20,000 units. 20,000 units. Internal transfers as such guys are 10,000 units. 10,000 units. Add a price of 290. Add a price of 290. That is the existing alternative guys. Existing alternative. Can we do this? Yes sir we can. शुरू करो बेटा सब लोग. Division PQR. Division RPQ. Division PQR guys and division RPQ guys. Output as such beta here is 20,000 units. सब लोग कर सकते हो guys. 10,000 and 10,000. Selling price per unit guys for external sales. Selling price per unit for external sales beta is 300 rupees. For internal transfers as such guys it is 290 rupees. Here beta the other division is selling 10,000 units at a price of 900. You variable cost per unit for external transfers it is 110. Internal transfers as such beta it is 100. But then the other division beta has a variable cost of 290 plus 396 80 rupees. Our contribution per unit guys is 190 rupees, 190 rupees and 220 rupees. Total contribution is fixed cost is 12 lakhs beta for both the divisions. 12 lakhs से है ना दोनों का. हाँ बेटा 12 lakhs for both the divisions. You guys can do it beta. You do not have to wait for me. Profit guys of this division is 45 lakhs. Here it is 10 lakhs. Total profit guys is 45 lakhs plus 10 lakhs 55 lakhs. This is the total profit guys of the entire company. Please write this better. This is alternative one. Like that will present another alternative as well guys. We would be presenting another alternative as well better wherein we transfer 14,400 units to the other division. 14,400 units to the other division guys. ठीक है. Yes, guys, I hope you're all clear about this. This was alternative 1, guys. Now, alternative 2, better. Alternative 2. Division, yeah. 15,600 beta and internal transfers of 14,400 units at 120 rupees, and this 15,600 are being sold at 300. Let us arrive at profitability statement, guys. Here, division PQR, division RPQ, external sales, internal transfers, external sales. The output here, guys, is only 15,600. Here, guys, it is 14,400. Here, guys, external sales are 14,400. Your selling price per unit, guys, for 15,600 units is 300 rupees. I'm so sorry. And here, but it is 120. 14,400 units, but they will be able to sell at 800 rupees. The variable cost per unit of external sales is 110, internal transfers 100 better. Here, guys, because you're transferring at only 120, guys, their variable cost per unit is 510. 120 plus 390. Your contribution per unit, guys, is 190, 20 rupees, guys, and this is 800 minus 510, 290. So your total contribution as such, what would be? Multiply, guys. This is into 14,400. 41 lakh 76,000, guys, is in respect of division RPQ, guys, external sales. Your 14,400, guys, into 20 is 2 lakhs 88,000. 15,600 into 190, guys, is 29 lakh 64,000. Put together, guys, is 2.88. 32 lakhs 52,000. Do not forget, guys, both the divisions are incurring a fixed cost of 12 lakh rupees. You will deduct 12 lakhs. Here, guys, 3252, matlab this will become 20 lakhs 52,000, and this beta would become 29 lakh 76,000. 29 lakh 76,000. Are we clear about this? Yes, sir. We are clear about this. Total profit of the company. I'm going to give you conclusions also, guys. Don't worry. Total profit of the company, guys. 20.52 plus 29.76, 50.28. एक काम करेंगे बेटा, प्रेजेंट अनदर ऑल्टरनेटिव गाइस. है नहीं बट फिर भी ये कॉपी करो बेटा सब लोग. आई होप यूर ऑल डन विद दिस बेटा. यू वर ऑल डूइंग इट विद मी. Yes, guys, I hope you're all clear about this. The next one is such beta. I'm just presenting an alternative for the purpose of comments, guys. Alternative 3, guys. Alternative 3 नहीं है बेटा, this is only for comments. This is only for comments as such, guys. तो यहाँ पे अपन क्या करेंगे बेटा is we will take external sales at 20,000 units. For division PQR as such beta. For division PQR, we would take external sales beta at 20,000 units. At 20,000 units. And then beta we would take internal transfers 10,000 units. But at uh, 10,000 units at 120 rupees, guys, so that we arrive at a proper conclusion as such, guys. We arrive at a proper conclusion. Division PQR, division RPQ. अरे यार ये कितना कंफ्यूजन है RPQ लिखना. सब लोग करो बेटा ये. Quickly finish off this profitability, guys. This is only for the purpose of writing comments, guys, so that we can comment on whether the company should implement a transfer price of 120 or not. External sales, guys. Output here beta is 20,000 units. Internal transfers 10,000 units. Here, guys, external sales are 10,000. My selling price per unit as such, guys, is 300. 120. This is 900. Variable cost per unit beta is 110. 100 rupees as such, guys, for internal transfers. Yes or no? And here beta this would be, if you're transferring at 120, guys, this is 510. 510. Our contribution per unit is 190. 20. 390. Total contribution, guys, is 20,000 units into 190 beta 38 lakhs. Here beta it is 2 lakhs and this is 39 lakhs. Total 40 lakhs. Fixed cost as such beta is 12 lakh rupees. The amount of profit beta that they're making is 28 lakhs and here beta this is 27 lakhs. Total profit of the company, guys. Total profit of the company obviously beta would remain at 55 lakhs. Would remain at 55 lakhs. That is the total profit that we got under alternative 1 also, guys. But under alternative 1 as such beta, it was division PQR as such beta that was making a profit of 45 lakhs and division RPQ was making only 10 lakhs. यहाँ पे beta it is somewhat better allocation of profits. Just and equitable, you can say. Copy this, guys, and then I'll give the comments. I'm just going to wait for a minute beta here. Yes, guys, I hope you're all doing this. Hello, beta. I'm assuming you're all done. Let us now write the comments. One thing is clear, guys, that from the viewpoint of the company, you are not supposed to, transfer 14,400 units to the other division and sell only 15,600 units in the external market, because that is resulting in an overall reduction of profits. If division PQR is selling 20,000 units in the external market and division RPQ is selling only 10,000 units out of internal transfers, overall profitability is 55 lakhs. But if division PQR is selling 15,600 and RPQ is selling 14,400, overall profit is coming down to 50.28 lakhs. So one thing is for clear, from the viewpoint of company, no, you'll have to sell only 20,000 units in the external market, but should sell 20,000 units and transfer only 10,000 units. However, guys, those internal transfers of 10,000 units are out of spare capacity, guys, are out of spare capacity. So in order to ensure better that division RPQ also makes a reasonable amount of profit as such, guys, they will have to fix a transfer price. They will have to fix a transfer price as such, guys, wherein even division RPQ is motivated. So it can be somewhere, it can be better closer to, it can be closer to variable cost. The variable cost is only 100 rupees as such, guys. So minimum transfer price is 100. So even a price of 120 rupees as such better would be fine. Even a price of 120 rupees as such better would be fine. Understood, sir. ये कॉपी कर लो बेटा. क्या था, हाँ सॉरी, कॉपी कर लो क्या, राइट डाउन गाइस. ऑल ऑफ यू राइट द कमेंट फ्रॉम द व्यू पॉइंट ऑफ कंपनी. कमेंट लिखो बेटा. फ्रॉम द व्यू पॉइंट ऑफ कंपनी, फ्रॉम द व्यू पॉइंट ऑफ कंपनी, division PQR, from the viewpoint of company, division PQR should sell 20,000 units in external market, in external market, in external market, and division RPQ should sell 10,000. Division RPQ should sell 10,000 units out of internal transfers. Out of internal transfers. So how do you know this? Total profit beta under alternative 1 is 55 lakhs. Total profit under alternative 1 is 55 lakhs. While total profit under alternative 2, total profit under alternative 2 is only 50.28 lakhs. Total profit under alternative 1, guys, is 55 lakhs, while the total profit under alternative 2 beta is only 50.28 lakhs. 50.28 lakhs. So undoubtedly beta, if you compare this 55 lakhs and 50.28 lakhs as such, guys, then yes beta, you'll have to restrict the output. ठीक है. However, guys, another important point, however, लिखो बेटा ये, transfers are made, transfers by division PQR are out of spare capacity, are out of spare capacity. Hence the minimum transfer price, hence the minimum transfer price, minimum transfer price is only 100 rupees. Variable cost per unit, variable cost per unit. Transferring at 290, transferring at 290 is reducing the profits of division RPQ substantially, is reducing the profits of division RPQ substantially. Substantially. Yes or no, guys? The transfer price should be closer to minimum transfer price, minimum transfer price, or say better, as they've decided in the question, 120 rupees. We do not know the maximum transfer price, guys, because we do not know at what price will the other division be able to procure it. We do not know at what price better will the other division be able to procure it. समझ में आ रहा है? हाँ, हाँ सर. Yes, guys. Are we all clear about this? Yes, sir. We're all clear about this. We will now proceed to question number. We're done with division. We're done with all the questions, guys. Till question number 18, guys. Till question number 18 सब हो चुके हैं बेटा. Question number 19, 20, 21 are similar. 19, 20, 21. All the three are similar as such, guys. Question number 22 and 23 are similar. मतलब एक ICS स्टडी मटेरियल का एक पुराना क्वेश्चन है. क्वेश्चन नंबर 24 आर डिफरेंट, 25 is different, 26, 27 are different. We just have a couple of more questions but are lengthier questions. उसके बाद में पूरे छोटे छोटे questions है. So it should be done with. Today is the 5th class, so maybe another 4 classes we will be done with this. So let us now solve question number 24, guys. Question number 24 beta. M Limited makes two products X and Y. M Limited beta makes two products, guys, X and Y in their respective divisions. Each unit of Y needs one unit of X. Divisions X and Y are profit centers and can function according to their divisional interest. Okay. In the external domestic market, X can sell either 6,000 units at 1,000 rupees per unit or 5,000 units at 1,120 rupees per unit. Now this is fun, guys. Your external sales is such beta can either be at a price of 1,000 rupees per unit or it can be at a price of 1,120 rupees per unit. X has a production capacity of 7,000 units with each unit requiring 2 hours. Y also has a production and demand of 7,000 units. Y can absorb all the 7,000 units. Y can buy product X from outside as follows. This is fun beta. This is seriously fun. Y beta can buy 6,000. If Y is buying between 6,001 units to 7,000 units beta from the external market, guys, he can buy the entire order at only 900 rupees. Anywhere between 4,001 to 6,000 units, he can buy at 920. Anywhere between 2,001 to 4,000 units, he can buy at 1,000. Anywhere between 0 to 2,000 beta, he will be able to purchase at 1,120 rupees. Y resorts to bulk purchase beta to avail maximum possible discount. There is an export order that may either be fully accepted or fully rejected for X to supply 800 units at 900 rupees per unit. Okay, apart from division X beta having an option of selling 6,000 units at 1,000 rupees in the market of 5,000 units at 1120, guys. There is an option, guys, wherein it can sell 800 units at 900 rupees. There is an offer to hire out X capacity of 1,600 hours but at 130 rupees per hour. The hiring offer may either be fully accepted or fully rejected. Y will not buy from X at any price more than it will incur in the outside market. Y does not place restrictions on quantities to be supplied by X, provided its pricing condition is not violated. Given that any one or more of the offers may be accepted, what will be X's best strategy, guys? When they say X best strategy as such beta, directly as such beta fixed transfer price at the maximum transfer price level, the price that beta the other division is willing to pay based on their external market price. A detailed cost statement is not relevant as such, guys. Only figures relevant for decision making are required to be considered under each analysis. We will be doing it, guys. What is more important beta is for you to read the question first. Go through the question, guys, properly. Understand each and every line of it. Understand each and every line, guys. I hope you're all done with this. Did you all read the question? Did you all understand the question, guys? I'll wait for a minute more. You'll have to understand it properly. Chalo guys, I'm assuming that you have read the question. What are all the options that are available to division X? What are all the options guys that are available to division X as such beta? क्या options hai? Sir, if you look at the question as such, sir, we have an option of selling 6,000 units in the external market at 1,000 rupees per unit. Yes, sir, we can sell 6,000 units in the external market at 1,000 rupees per unit. Uske alawa, sir, we can also sell either that as such, or we can sell 5,000 units at 1,120 rupees. We will decide as to what is beneficial to the company as such beta. ये बुक्स यहाँ से वहाँ करने में टाइम चले जाता है यार. We can decide as to what is more beneficial for the company, guys. ठीक है sir. And then we have an export order of 800 units. We also have an option, guys, of transferring anything up to 7,000 units better to the other division. Anything up to 7,000 units to the other division. Okay, sir. And then we have an option of leasing out our plant capacity, guys, 1,600 hours at 130 rupees per hour. Okay, sir. So question number 24, beta. Options available. What are all the options that are available to the company, guys? Options available, guys. The options that are available beta is external sales, either 5,000 units beta at 1,120 rupees per unit, or 6,000 units, guys, at a price of 1,000 rupees per unit. 1,000 rupees per unit. Either 5,000 units, guys, or 6,000 units. Correct likhana? हाँ sir, correct. And then, guys, we have, there is a special order, guys. Special order. And that special order beta is for 800 units at a price of 900 rupees per unit. 900 rupees per unit. And then, guys, there are internal transfers. Internal transfers as such, guys, will be anything up to 7,000 units. The most important part beta in this question is computation of maximum transfer price. चाहिए तो question में लिख सकते हो बेटा. यहाँ पे बेटा ये भी लिख सकते हो. Important part beta is computation of maximum transfer price. Computation of maximum transfer price. How much will the other division beta be willing to pay us? That is the most important part of this question. बाकी पूरा तो normal है बेटा. Rest everything is normal, guys. Anything up to 7,000 units, guys. Any quantity up to 7,000 units. They are willing to buy, guys. They are willing to buy. Remember, guys, the total procurement cost of division Y should not change. The total procurement cost of division Y should not change. Should not change. समझ में आ रहा है? Yes, sir. The total procurement cost of division Y as such beta should not change. Remember that, guys. How is that to be done? I will tell you beta, do not worry. We also have an option of leasing out plant capacity beta, or hiring out. Leasing out plant capacity, guys. Plant capacity. Leasing out plant capacity, guys. We can lease out 1,600 hours at 130 rupees per hour. But ये option मैं consider नहीं करूँगा. I will not consider this option. Why, sir? My wish, sir. ऐसा नको बोलो, sir. अरे सुनो रेखा दो. See, guys, first important thing, I hope you were all listening, guys, and you were not copying. First important thing beta is that we do not have details regarding variable cost per unit. There are no details that are given regarding variable cost per unit. Correct, sir? Correct. I will have to take a decision based on revenue. I will have to take a decision, guys, based on revenue, not on the basis of variable cost per unit, not on the basis of contribution per unit. Because there are no details given as such, guys, because there are no details given for variable cost, I will have to directly take a decision based on total revenue, guys, and not based on total variable cost. Not based on total variable cost. Understood, sir? If that is the scenario, sir, if you will have to take a decision on the basis of total revenue and not on the basis of total variable, total contribution as such, I will have to ignore the last option. I will have to ignore the last option. Sir, why do you have to ignore the last option? Sir, 1600 hours at 130 rupees per hour. I will have to ignore it as such, guys, because the revenue that I am getting by leasing out plant capacity as such, guys, would entirely be my contribution. And the revenue, the contribution that I'm going to get better by selling a product, as such, guys, and the contribution that I'm going to get by leasing out plant capacity are different, guys. I will not know what is the contribution that I'm getting from selling a product. So I will have to ignore the option of leasing out plant capacity. I cannot take that into consideration. See, guys, when I'm leasing out plant capacity, better, obviously the entire revenue is my contribution. But when I'm selling a product, better, my revenue is not equal to contribution. So here I will not be able to compare them, guys. I will not be able to compare them, better. That is why we will have to ignore one alternative altogether. We will have to eliminate this option of leasing out plant capacity. Matlab, we will clearly write a note that, boss, we cannot take this into consideration. You did not give us the right information. Maybe next time, improvise, give us the right information. Yes, sir. Copy all of these alternatives. I'm going to give you that explanation in detail. Beta, first copy all of these details. Copy these details. I hope you're all writing this, guys. Please write these alternatives. Yes, guys. I hope you're all done with this. ठीक है. हाँ सर, अभी वो नोट लिखो, guys. Details regarding variable cost per unit are not given. Please write a note, beta. Details regarding variable cost per unit. Details regarding variable cost per unit are not given. Details regarding variable cost per unit are not given. Decision will be taken on the basis of total revenue. Decision will be taken on the basis of total revenue of 7,000 units. Total revenue of 7,000 units. Variable cost of 7,000 units will be same irrespective of selling price. Will be same. Guys, whether you're selling in the external market, whether you're selling it internally as such, but whether you're taking up the export order, doesn't matter, guys. Your variable cost of 7,000 units, beta, will be same irrespective of selling price. So whatever is your, so maximum revenue, beta, will result in maximum contribution. Whatever is your maximum revenue, beta, that would automatically result in maximum contribution. Maximum revenue will lead to maximum contribution. Will lead to maximum contribution. Contribution. Understood, sir. Understood, sir. Absolutely no problem. Okay, sir. That is your maximum revenue beta leading to maximum contribution. However, beta, please understand. However, the revenue received, from leasing out machine, itself will be contribution. Itself beta will be contribution. सब लोग लिख रहे हो ना बेटा, मैं पढ़ा चुका हूँ. Itself will be contribution. So because itself will be contribution as such, guys, it cannot be compared with other revenues. It cannot be compared better with other revenues. It cannot be compared better with other revenues. So what am I supposed to do, sir, if I cannot compare it with other revenues? What am I supposed to do if I cannot compare better it with other revenues? If you cannot compare better it with other revenues, we will have to ignore the option of leasing out. We will have to ignore the option of leasing out machining capacity. Option of leasing out machining capacity. Understood, sir? Point noted. Whatever you wanted to tell us. I hope you're all done with this. I'll still wait for 10 seconds, better, just in case you're done with it, and then present all the alternatives. Guys. Yes, guys. I hope we're all clear about this. Guys, let us come to the alternatives that are available if you're leasing, if you're ignoring that better. Alternatives available. I simply have to compute revenue, guys, under all the alternatives, and then that itself would be the answer, guys. That itself would be the answer. Okay, sir. External sales, internal transfer, export order. Okay. Alternative one beta is, how about I transfer the entire 7,000 units internally as such, but I do not sell anything in the external market. Do not, guys, undertake the export order as well. Alternative 2 beta is, what if I sell 5,000 units in the external market, 2,000 internal transfers. Alternative 3 beta is, what if I sell 5,000 in the external market, guys, take up the export order and 1,200 internal transfer. Alternative 4 beta is, what if I take up external sales at 1,000 units beta, internal transfers 1,000. Alternative 5 beta, what if I take up 6,000 units, guys, here beta it is 200 and 800. These are all the I'm giving preference to internal transfers as such, guys. I'm giving preference to. Now you might say, sir, 6,200 units internal transfer and 800 units export order. लिख लेते बेटा वो भी, all the alternatives that you are thinking of. That is not relevant, guys, but still I'll present. These are all the alternatives that are available with me, guys. I would want to know, guys. I would want to know that if I am transferring, that if I am transferring only क्या बेटा 1,200 units or 1,000 units or 200 units to the other division, what is the transfer price beta that they're willing to give us? What is the transfer price beta that they're willing to give us? That is the most important part of the question. If you can do that as such beta, the entire answer would be done. Think about these alternatives, guys. Please write about these alternatives and then we'll present the answer. This is also answer only as such, guys. All of you write this. I've just presented all the alternatives. Now the most important part beta would be computation of transfer price. It would be computation of transfer price, guys, now. Yes guys, I hope you all copied this. अभी सुनो बेटा सबसे important part. This is what is the most important part बेटा now. The total, you know guys that if you do not transfer anything as such guys, division, यहाँ पे बेटा a lot of students go wrong as such guys. A lot of students go wrong here as such guys. So this is the most important part now. This is the most important part as such guys now. So क्या होता है बेटा is what happens beta usually here is that a lot of students as such guys go wrong in computation of internal transfer price. They think beta that if you are transferring them 2000 units will transfer at 1120 rupees. गधा है क्या बेटा वो देने वाला? He is not going to give you 1120 rupees beta for 2000 units. Lesser the units transferred, higher the transfer price. कौन सिखाता है बेटा ऐसा? Nothing like that guys. Please understand guys. Please understand. Now computation of transfer price beta most important part of the question. Computation of maximum transfer price. The maximum amount beta that the other division is willing to pay. Maximum transfer price. What is the other division's name beta? Division Y, right? Or division B? Division. Division Y guys. Division Y can procure the entire 7,000 units from the external market. Most important part beta suno, from the external market. At what price sir? They can procure the entire external from the external market as such beta at a price of 900 rupees per unit. Yes sir. So the total procurement cost of division Y guys, the total procurement cost of division Y cannot exceed. The total procurement cost of division Y guys cannot exceed. How much sir? How much should it not exceed? It should not exceed 900 beta into 7,000 guys, and that is 63 and another 50. 63 lakhs beta. 63 lakhs. No way बेटा that the procurement cost should exceed 63 lakhs. अभी देखो बेटा केस 1 में, alternative 1 में, सुन लेना बेटा वरना मर्डर करूंगा. Alternative 1 guys. Alternative 1. If entire 7,000 units are transferred, if entire 7,000 units are transferred guys, are transferred. If entire 7,000 units are transferred as such guys, your maximum transfer price as such beta would be 63 lakhs per unit. They will give us, they'll be like, okay, we were anyways paying 63 lakhs in the outside market, we will give you 63 lakhs. So per unit as such beta, it would be 900 rupees. Division Y beta will be like, okay, we were anyways paying 63 lakhs in the external market, come here, you take 63 lakhs and get lost. This is what they will tell us beta. In the second alternative guys, if you transfer 2000 units, if 2000 units are transferred, now guys pay attention, this is the important part. This is the important part guys. Division Y will have to procure 5000 units. Division Y will have to procure 5000 units. कहाँ से खरीदना बेटा? Procure 5000 units from external market. If we are transferring 2000 units guys, their requirement is 7000 beta. Requirement of division Y as such beta is 7,000 units. Please let us not forget that beta. Let us not forget that. So if you transfer them 2,000 units, they are going to purchase 5,000 units. They are going to purchase 5,000 units from market beta at a price of anything between 4,001 to 6,000 beta. It is at a price of 620 rupees. Sorry, 920 rupees. It is at a price of 920 rupees beta. Please do not forget guys that if they were to buy 5,000 units from the external market, they will pay 5,000 into 920 beta. So guys, remember their maximum procurement cost as such beta, their maximum procurement cost cannot exceed 63 lakhs. No matter what happens as such beta, they will not pay you a penny more. Their outflow cannot exceed 63 lakhs. And then beta, what is their procurement cost of 5,000 units from external market? Procurement cost of 5,000 units beta from external market. From external market guys, if they were to procure 5,000 units, it is at a price of 5,000 into 920 guys. 46 lakhs. 46 lakhs as such guys. So they will be like, okay boss, listen. If we were buying entire 7,000 units from the external market, we would have paid only 63 lakhs. Now that you want to transfer us 2,000 units, we still have to go and buy 5,000 units from the external market at 920 rupees. That is 46 lakhs. So they will pay us. So the maximum transfer price beta for 2,000 units, the maximum transfer price beta for 2,000 units cannot exceed 17 lakhs. They'll be like, okay, for those 2,000 units, we will pay you the differential. Try to understand this part better. Their procurement cost cannot cross 63 lakhs. They'll be like, no matter what happens, we know that we can buy at 63 lakhs. Merely because you are supplying us 2000 units, we are paying 46 lakhs in the external market. You take the differential 17 lakhs and give us 2000 units. You take the differential 17 lakh rupees and give us those 2000 units. This is what division Y will tell you. And you'll be like, okay, sir, understood. I'll take 17 lakhs and I'll take, go away. ठीक है, that is alternative 2. Alternative 3 में बेटा you're transferring 1200 units. समझ में आया? ये एक काम करो बेटा, ये तो कॉपी करो ऑल्टरनेटिव 1 एंड ऑल्टरनेटिव 2 सो दैट यू गेट एन आइडिया, एंड ऑल्टरनेटिव 3 विल डू इट कलेक्टिवली. ऑल्टरनेटिव 3 से बेटा वी विल डू इट कलेक्टिवली. If you better copy this. करो बेटा. I hope you're all done with this, guys, and there is absolutely no doubt. Chalo beta. Now guys, what will happen guys? Third scenario beta is, what if you transfer 1200 units? Now if we transfer 1200 units guys, 1200 units to division का नाम इसका division y guys, ठीक है? Division y will have to procure, division y will have to procure how many units beta? Will have to procure 5800 units beta from external market, from external market guys, at 920 rupees, at 920 rupees. Yes or no? Yes sir. So here beta what will be happen? Their maximum procurement cost is such beta, साथ में करो guys, you will now know all of this. The maximum procurement cost as such beta cannot exceed 63 lakhs. The procurement cost beta of 5800 units as such guys is 5800 into 920 guys, 53 lakhs 36,000. So the maximum transfer price for 1200 units is 9,64,000. 9,64,000. This would be the maximum transfer price beta for 1200 units. Now guys, transfer price beta for 200 units, sorry 1000 units. If we transfer 1000 units, यहाँ पे per unit लिखना है तो लिख सकते हो ना बेटा. Per unit guys, this would be 9,64,000 divided by 1200 units. 803.33. 803.33 beta is your per unit transfer price here. So if you transfer 1000 units guys, I can say beta the division y will procure say beta 6001 units from external market at 900 rupees. Guys, instead of 6000 units at 920 guys, एक unit फेंक दो बेटा. You will ask them to throw one unit. 6001 units beta at 900. Ask them to reduce it from our payment. 6001 units at 900 beta is better. No. Why will you want to do this? This is alternative 3 but I hope you've all got the answer guys to alternative 3 as well. 803.33. नहीं हुआ तो pause करके copy कर लो बेटा alternative 3. If you are not done with this beta, you can pause and copy alternative 3 guys. Pause and copy alternative 3 just in case you're not done with this part. Yes sir. Alternative 4 guys, division y will procure 6001 units beta from external market at a price of 900 rupees. At a price of 900. So यहाँ पे बेटा क्या हो जाएगा इस basically your maximum procurement cost beta, maximum procurement cost is 63 lakhs minus beta procurement of 6100 units at 900 beta 54 lakhs लिख सकते हो बेटा और 900 if you wish. So this beta would be the maximum transfer price for 1000 units. 8,99,100 or you can say approximately 9 lakhs as such beta. You can say 9 lakhs beta कुछ फर्क नहीं पड़ेगा, ठीक है? Let them carry forward inventory. Let them carry forward inventory. So this is 900 rupees. I hope you're all done with alternative 3 guys. Just in case you're not done with alternative 3, please pause and copy. I hope you've understood the whole concept of computing maximum transfer price here. I hope you've all understood the concept of computing maximum transfer price guys. This is alternative 3. Pause and copy if you're not done with this. This is alternative 4 guys. I'm zooming in and waiting for 10 seconds. I'm zooming in and waiting for 10 seconds guys. You can check this. I hope you're all clear about this beta. Now guys, what will happen guys under alternative 5 beta is if you transfer 200 units or 6200 units. Alternative 4 guys, if we transfer कितने बेटा 200 units है, on sir 200 units Please do it with me. This is alternative 5. 5 kada? 5. If we transfer 200 units, beta division Y will have to procure. Division Y will have to procure 6,800 units. 6,800 units from external market. And that would be at a price of 900 rupees. At 900 rupees. Let us not forget, beta, that their maximum procurement cost cannot exceed 63 lakhs. Their maximum procurement cost, beta, cannot exceed 63 lakhs. Their procurement cost of 6,800 units is procurement cost of 6,800 units at 900 rupees, beta, is 61 lakhs 20,000. So this would be your maximum transfer price for 200 units. 1,80,000 rupees. 1,80,000 rupees, beta. Your transfer price per unit is 1,80,000 divided by 200 units, 900 rupees. 900 rupees. This is better if you transfer 200 units. This is, guys, if you transfer 200 units. Are we clear about this? Yes. नहीं हुआ तो क्या करना है सर? पॉज करके कॉपी करना है. I'm so proud of you guys. If you're not done with this part, but you can always pause and copy. You can pause and copy if you are not done with this part. Yes, sir. Are we all clear about this? Yes, we are all clear about this, sir. If we transfer 200 units, transfer price per unit beta is going to be 900 rupees. Transfer price per unit is going to be 900. Now, guys, sixth bit. Sixth bit, guys. If we transfer 6,200 units, 6,200 units, division Y will have to procure. Division Y beta will have to procure 800 units from external market. From external market at 1120 rupees. At 1120 rupees, guys. वापस वही लिखना है बेटा. Maximum procurement cost is 63 lakhs. Less beta procurement cost of 800 units would be 800, guys, into 1120. 8,96,000. So this beta would be the maximum transfer price. Maximum transfer price of 6,200 units. 54 lakhs 4,000. 54 lakhs 4,000, guys. So your transfer price per unit. क्या मैसेजेस आते जा रहे यार इतनी सुबह सुबह. 6,200 units. 871.613. ठीक है? Yes, sir. You can. I'm zooming in as such, but I hope you're all done with fifth one. But just in case you're not done with the fifth one, please pause and copy the fifth one as well. I hope you're all done with the fourth one, guys. Third one भी हो चुका है तुम्हारा. Fourth one भी हो चुका है. Fifth one भी हो चुका है, guys. And finally, if you're not done with the fifth one, please pause and copy, guys. And finally, better the sixth one. Pause and copy this, guys, just in case you're not done with this. Just in case you're not done with this, but you can pause and copy this. You can pause and copy this, guys. Okay, sir. Done. Now, beta, the next part here is to arrive at your revenues under each alternative, beta. Revenues under each alternative. There is this external sales. External sales है ना बेटा? हाँ sir. There are these internal transfers. There is this export order. And then you will have to write total under each alternative. Alternative 1, guys, going by whatever I wrote above, beta, transfer the entire 7,000 units internally, beta. I would get a transfer price of 900 rupees. That is 63 lakhs. Dash 63 lakhs. Alternative 2 beta that I wrote above is to transfer 5000 units internally and 2000 internal transfer. 5000 units externally beta and 2000 internally. So this is 5000 units external beta at 1120. 1120 5000 beta would be 56 lakhs and 2000 internal transfers beta is at 17 lakhs. So all of this put together is 73 lakhs. Alternative 3 beta is to transfer, sell 5000 units in the external market beta at 56 lakhs. 1200 units internal transfer at 803.33. 1200 units only, no? At internal transfer beta 9,64,000. An export order of 800 units beta at 900 rupees. 7,20,000. So all of this will be 56 plus 7.2 plus 9.64. 72,84,000. This is your total revenue under alternative 3. Alternative 4 beta, sell 6,000 units at a price of 1,000. 60 lakhs. 1,000 units internal transfer beta was at 900 rupees only. So that is 9 lakhs. Put together beta 69 lakhs. Alternative 5 beta is to sell 6,000 units in the external market at 1,000 rupees beta 60 lakhs. Sell only 200 units internally beta at 900, 1,80,000. Export order at 900 beta same. 7.2 lakhs. Put together beta 69 lakhs. Alternative 6 beta is to sell 6,200 units beta, add a price of 871.613. 54.04 lakhs. Export order beta is 800 into 900 guys, that is 7.2 lakhs. Put together guys, 54.04 plus 7.2, 61.24 lakhs. The maximum revenue beta is under alternative 2. Therefore beta, division AX, 5000 units beta should be external sales. External sales beta at 1120 rupees. And beta 2000 units internal transfers beta at 850 rupees. This would be the answer guys. All of you beta can check this. एक काम कर सकते हो beta, you can also pause and copy this. Guys. एक काम करो बेटा, सब लोग पॉज करके कॉपी कर लो, ये कुछ नहीं है. आई रिपीट गाइस, पॉज एंड कॉपी दिस. यस सर, पॉज एंड कॉपी दिस बेटा. Pause and copy this. Pause and copy this. Pause and copy this. Done? Done, sir. I really do not know beta which questions can be given as homework, which questions cannot be, because यहाँ पे क्या है बेटा, those questions that I left in between are all different models. Obviously, I have to explain them, guys. 19, 20, 21, 22, 23, all of them I'll have to explain. Question number 25 is simple, but then it is from the viewpoint of one division. 27, 28 है अलग है, 29 भी easy है. That's it guys, no homework questions, forget it, we'll discuss in the next class. ठीक है, चलो guys, bye bye, see you guys in the next class. Keep revising, keep studying guys. Okay, चलो बेटा, bye bye.